Hello, everyone. My name is Adriana Calderon. I'm the lead partner of Transfer Pricing Solutions Asia, a consultant firm that specializes in transfer pricing advisory services for multinational groups in Asia. And today we had a fantastic workshop with the Institute of Chartered Accountancy in Singapore, discussing the related party form. For those of you that are not familiar with the Singapore tax return, in the Singapore tax return, every company has to report related party transactions to the tax authority, which is IRAS. So essentially, the form is designed to capture key information about domestic and cross-border international related party dealings by taxpayers in Singapore. So the taxpayer will have to provide details about who the ultimate holding company is, the country, the granular transaction information in terms of by type of transactions, such as sales of goods, services rendered, royalties, interested, and more granular information in comparison with the audit financial statements, as you have to separate it between items of income and expenses. And then the taxpayer will also have to classify the top 5 countries that the Singapore taxpayer transacts with. So IRAS can have enough information to decide which taxpayers are going to be subject to transfer pricing audits in Singapore. So interestingly enough, one of the things that basically we discovered today, or that is always discussed, is the fact that most taxpayers are not fully aware about the fact that the related party form is the only document that the IRAS receives as in relation to transfer pricing. And in our experience, this related party form is really used as the basis for IRAS to decide which taxpayers are going to be subject to TP audits. Generally, when the TP audit comes 2 or 3 years down the track, what we get asked is about the transactions that the taxpayer disclosed in the related party form as part of the tax return. Some things to remember is the risk factors, and in plain language is what are the chances that my company or the Singapore taxpayer is going to be elected to transfer pricing audit. So key points are here important to keep in mind. One is the value of the related party transactions, and particularly large values of cross-border related party transactions. Transactions with related parties in jurisdiction with a more favorable tax rate. The performance of the business over time, such as recurring losses or large swings of operating results, not explained by other industry players, transactions involving the use of intellectual property and intangibles, and transactions involving development of IP. So keep in mind that it's very important to have or prepare the related party form correctly, and also be prepared to answer any questions about the related party transactions that the taxpayer discloses in the tax return, because once disclosed, the chances are that IRAS will be able to ask you if it is of the view that your transactions are so high in value that you may not be complying with the arm's length principle, or if it is suspect that it needs to check compliance with the transfer pricing provisions in Singapore. Thank you very much. I look forward to give you another wrap very soon about some of our other interesting workshops, so you get an insight on the discussions that we usually have in the workshops that we hold. Thank you.